Everybody, welcome back to another episode of Bitcoin and Markets. Welcome. Happy Tuesday. It is February 28th, last day of February 2023. And yeah, on Bitcoin and Markets, I talk about all things Bitcoin from kind of I wouldn't call myself necessarily an OG, but from a long time Bitcoin perspective. Been around for a couple cycles. And I guess if you include this one, this will be a third cycle that I've been involved with. And so I talk about Bitcoin from I think, a holistic economic perspective, as well as macro and all that. So today, what we're going to look at is a little bit on the charts, what's going on out there in Bitcoin and currencies. And we're going to look at oil and some things like that. And then we're going to jump into the main topic on Twitter of the day that I saw, at least, and that is the back and forth between people saying, hey, by not getting the back of altcoins, or maybe even celebrating that altcoins are being taken down a peg by the SEC and stuff, that is somehow anti-Bitcoin and things. So we're going to look at both sides of this argument, and I'm going to give you what my thoughts are. But join me for that today, as well as checking out bitcoinandmarkets.com. That's what you're seeing on the screen right now if you're watching on YouTube or Twitter. And there you can get, sign up for the free weekly newsletter, get all of my stuff that I do, all my posts of content that I put out. And you can also support me financially on the website if you want to support high quality content in Bitcoin that has never sold a scam to anybody. I mean, I guess if you say Bitcoin is kind of has some Ponzi scheme aspects, I mean, okay, guilty as charged there, but I've never sold an ICO or a DeFi token or anything like that. I've called those things scams throughout the entire thing. I've also was rated as the most toxic Bitcoiner during the scaling conflict. I used the term Bcash more on Twitter than anybody else. Or I don't know, some independent body kind of rated the toxicity of Bitcoiners during that period, and I was number one. So I have that accolade to my name. But yeah, and then in macro, I've been pretty accurate over the last couple of years, especially since COVID, since kind of reevaluating my Bitcoin assumptions and reevaluate, like the history of me in economics, because I do have a degree in economics from my previous life, but I've always been a sound money advocate, an Austrian school economist. But then I reevaluated my assumptions when I found Bitcoin, because gold wasn't doing as I expected, as I was told that it was going to do, right? The quote unquote experts that knew the industry, that were the hardcore economists at like the Mises Institute and stuff. And they tell you, look, these are the PhD guys that kind of run the Austrian school. And they say, hey, this is the end. Gold is going higher and all this. And that didn't happen, right? So I reevaluated the assumptions. I found Bitcoin. And then after being in Bitcoin for about 6-7 years, I need to reevaluate and make sure I really understand this. And so that's what I did. And I've kind of shifted my perspective here in the last 3-4 years. And it's a very unique perspective in Bitcoin, and I would say in the sound money space. So anyway, welcome. Thanks for joining me. And let's get on with today's topics. So first thing, let's just look at the charts here. So bringing up the Bitcoin daily. Try not to talk when I'm sharing my taking a screenshot or whatever, because the audio cuts out on YouTube. But here we go, is the Bitcoin daily chart. Red on the day, let's see, down about 1%, nothing crazy. One of the things I was saying just a minute ago on Telegram is that if you believe the headlines, you would think Bitcoin was in an all-time low, and you would think the stock market was, crashing, but that's not the case. I mean, Bitcoin is rallied. It's still up like 40% on the year, just the last couple months. And the stock market is significantly off the lows from several months ago. And if you go all the way back to the beginning of the rate hike cycle for the stock market, which we can do that right now. Let's go to the S&P 500. The hiking cycle starts, and so we could pick some random time in March. It wasn't much higher than it is today. I mean, yes, it is higher, but then once you start getting into May of last year, as the first couple rate hikes from the Fed, 25, 50, that then only then did they hit the 75, 75, 75. And since basically hitting the 75 and really hitting the gas on their rate hikes, the stock market has been sideways. Yes, it's made some lower lows, but it's at the pretty much the exact same level as it was back in May of 2022. So we need to ask ourselves, does the Fed, like their intention is to crash the market. Their intention is to harm demand, right? But are they really even doing that? Do rate hikes actually destroy demand? Because as far as I'm sitting here, yes, there has been some pullback in credit expansion, and we've covered that here on the show. There has been some harm done to the housing market, but the majority of the statistics out there are not showing some utter devastation going on from the fastest rate hiking cycle in Federal Reserve history, at least in the last 20, 30 years, and nothing has happened. So does the Fed actually do what they say they do? Of course, longtime listeners of the show will know I don't think they do. They have window dressing. They try to jawbone the market in one direction or the other. They don't mechanically move the market. And we know that. I mean, there's evidence staring us in the face right now. They don't mechanically change the market, or else the stock market would be way lower than it was at this time last year. All right, let's take a look at some other charts here. So oil is one of my favorite charts because the world is so dependent on, I didn't post the S&P 500. Stand by 1 second. I'm going to post that in Telegram. Sorry, guys. And then let's go to oil. And I'll also post this in Telegram. If you guys want an unedited version of this, or a uninterrupted version of these podcasts, you can listen to the actual podcast feed. I also put out a audio version on YouTube later on of the podcast. That way, I cut out a lot of these misspeaks or big pauses that I do. So make sure you check out the podcast feed. Okay, so this is oil up slightly on the day, 76.88 for this is U.S. oil, U.S. crude, WTI. And it's just continues to bleed out. All right, there is no strength in this market. If you looked at this and you're like, where's the demand? That's what you should be asking yourself. Where is the demand? This spike up here that went all the way to 29 or 129, this was the initial panic of the Russian action there in Ukraine. The initial panic. And then after that, it's been down. It has been down ever since. Also, if you look at where it was right before the Russian panic, we can zoom out a little bit. Of course, it went below zero during COVID. But right before the Russian panic, it was at 94-ish, in the mid-90s, which is high. But I don't know how people would look at this chart and think we're going towards a new paradigm of higher oil. I would look at this chart and be like, typically we're between 70 and 90. 90 was a little bit on the high side. And then Russia happened and people panicked. And there was a brief breakout in the price of oil. But now we're getting back down to normal. Plus, all of the economic demand destruction that has happened since the sanctions were put on and things like that. that's going to weigh on global demand for oil as well. So I don't know how people can look at this chart knowing what's going on in the world and think oil is going much higher. Again, I'll always put the caveat out there that I would not be surprised with a rally in oil, just like all markets have their ups and their downs. But on a long-term trend, like if you take the 200-day moving average, it's sloping downward, and I don't expect it to really accelerate. Let's actually pull that up. So the orange line is the 200-day moving average. You can see it's downward sloping now, and I expect that to continue. Let's go. Actually, this is an interesting hit right here. Look, today it tagged the 50-day moving average exactly. This is the type of stuff that, people need to look at and then explain to me how this is possible, that the 50-day moving average looks to be so pivotal in this kind of stuff if TA doesn't matter. Of course, my position on the show is that TA does matter because it is a bunch of shelling points. It is where the market is looking at that time, where important levels for people, important levels for different economic activity. So, for example, oil might be, at $90 a barrel. It's too expensive for certain economic activity to be profitable. So it's probably, if it peaks out above that, it destroys demand and then it falls. So there's going to be like these important levels, price levels of different commodities that will show up in the chart. And you'll be able to see them just by the way the price action moves. But anyway, so I'm just zooming out here to see this 200-day moving average and how, it's much slower moving. But once it starts going down, like here in November of 2018, once it rolled over and went downward sloping. Yeah, we had a little peak here at the end of 2019, but it was way down after that, right? The price was way down. So once the slope of the 200-day changes, it usually means that something has fundamentally changed in this market. And that's exactly what we see right now. We see the 200-day sloping downward. So until we have some sort of economic crisis, I don't expect, get through the other side of an economic crisis. I don't think that oil is going much higher at all. It'll have its peaks, like I said. Like, just look back here, in 2019, and share that with Telegram. It had its peaks back there in 2019, but nothing got out of hand. You just had a random walk here for about 6 months before then it really chose a direction. So I wouldn't be surprised with something similar to that now. But overall, the general trend for energy is lower because the general trend for economic output and economic vibrancy of the global economy is lower. That doesn't mean necessarily that we're going to be in recession, especially in the US. I saw a tweet from Pierre Rochard this morning, and he was talking about interest rates, like mortgage rates, and how that mortgage rates can affect affordability like crazy of housing, and how possibly could we not have a collapse. My what I thought when I saw his tweet was that, yeah, you either have to have prices coming down or you can have rates coming back down. I lean on that rates will do more of the movement than prices. I think prices could come down, and they have, but mostly rates will come down. And I also think it's a mistake to look at something in aggregate, or at least it's hard to make sense of a certain metric if you're taking something in aggregate, like housing prices in the United States. That is such a varied market. But if you talk about, hey, housing prices in California, or housing prices in Florida, or even housing prices in Southern Florida, whatever the case is, if you break it down, you can see a lot more nuance. So where was I going with that? Recession is the same way. So recession can obviously hit certain places harder than others. And where is this coming financial crisis, this greatest recession, maybe you could call it, is going to be the worst, I think, in Europe and Asia, East Asia, China specifically. But I think Europe and China are going to be the hardest hit. Of course, I think Africa is also going to be hit pretty hard, but not as bad as Europe and not as bad as China. So anyway, we are coming into a major recession, a major financial crisis of some sort, whether that's in 2023 or my kind of conclusion on this is that it's going to be in 2024. But once we come out of the other side of that, whether that takes 3 years or 4 years or whatever, then oil prices can change the trend and start going back up. So that's, I guess that was a long-winded explanation. Okay, let's take a look at the dollar. And I'm going to extend it here. And this is going to take it to the top. Okay, I shared that with Telegram. All right, so you can see we're green on the day, up about 0.25%, higher, quite a bit off the lows. And I just want to point out there is some weird stuff going on here, correlation with Bitcoin. All right, so look at this. Since February, it bottomed and it's higher. Okay, so 2023, it's higher, basically, because 2023 opened for the dollar at 103.6, and now we're sitting at 104.8. So the dollar is higher, at least DXY is higher on the year. So Bitcoin is also higher on the year, of course, quite a bit higher. But that's the correlation I want to point out here is the dollar has risen along with Bitcoin. So has stocks, or stocks are quite a bit higher on the year as well. Let's see. Stocks opened the year at, or the S&P 500, 38.53, and right now it's at 39.77. So stocks are higher on the year as well. So the dollar, Bitcoin, and stocks are all higher, gone higher together this year so far. Very interesting. All right, so that takes us into our next point here, and this is a tweet from Joe Consorti. He works with Nick Bhatia at the Bitcoin Layer, and this was a tweet he had. Inflation is still rising in the Eurozone. The one monetary policy, separate fiscal policies approach has trashed the EU. And what he's talking about there is, the EU has a bunch of these separate countries with their own fiscal policies, but they have one monetary policy. It is actually, though, similar to the US and the States, but there is a much closer relationship with fiscal policy due to the taxation that can happen on the federal level. Taxation and stuff doesn't really happen on the EU level. It does happen, but it's not nearly as closely linked as the United States are. The United States of Europe are not as closely linked. Okay, so he also says more rate hikes on the way, stronger euro, weaker dollar, good for risk assets. Okay, well, weaker dollar, stronger euro from ECB rate hikes. I mean, what evidence is there that rate hikes have made a stronger euro or a weaker dollar? So now let's go back to this. Sorry, guys, I'm going to switch back to this other tab, and we're going back to the dollar. A weekly chart. Let me take these moving averages off. And the Fed has hiked more than the ECB, much more. We've done more QT, quantitative tightening, yet the dollar is higher. The dollar is higher, not weaker. Let's take a look at the euro, which is pretty much the inverse of this. This happened to the euro during their era of QE over there in Europe. It's lower. The euro is lower. So the euro is lower when the ECB is tightening, but the dollar is higher when the Fed is tightening. That's kind of confusing. Well, we have to understand that what the central banks are doing doesn't really matter all that much. If it does matter, it matters in the inverse way of what most people think. So with the interest rate fallacy from Milton Friedman, as interest rates go higher, that means that money is loose. And as interest rates are lower, that means money is tight. It's the reverse of what most people think. So when I hear QT, like let's say ECB, and I made this connection years ago, probably. I mean, you could find it on my podcast from 2019 or something, probably. But it didn't match where we're doing QE, which is supposed to be inflationary, but the dollar kept strengthening. It didn't make any sense. I was like, well, what's going on here? Well, it's because QE, as people think that's stimulus, they think that's going to be stimulus. And so then the money will flee to the economy, the place where they think there's going to be the most business opportunities. So when you're doing QE, the dollar can strengthen. That was my rationale. Well, let's use this with the euro. So if they're doing QT, that doesn't mean the euro is going to get stronger. It means people are going to flee from the European economy. If the US is not tightening, or if the Fed is not tightening and the ECB is tightening more, that's going to make people think that the economy in Europe is going to be worse, and they're going to flee over to the dollar and flee over to the dollar-denominated economy. So actually, QT isn't going to make the euro stronger, and I don't know of any evidence that this is the case. There's very, very little evidence of that being the case. So back to Joe Consorti's tweet, he says, more rate hikes from the ECB means a stronger euro, no. A weaker dollar, no. And good for risk assets, no. Because I just showed how the dollar, stocks, and Bitcoin are all up on the year. So how can the dollar be higher and Bitcoin be higher and stocks if a weaker dollar is good for risk assets? I just don't think that there's much connection here to the traditional way of what people think of as the way currencies work and what's going on with the market. All right, so that's all for that one. Andrea Steno had an awesome tweet here today as well, and it goes, so number one, equities are up since summer of 2022. Number two, inflation is down since summer of 2022. And yet this media is still overcrowded by the "we told you so" perma bears, inflationistas, saying they have been right. They simply live in a different reality. And I love this. This was such a hot take because he's exactly right. This is exactly what I've been saying. These perma bears have not been right about anything. And then they turn around and now they're saying, oh, inflation, quote unquote inflation, which is CPI or prices, are going to be persistently higher for longer. So if you're a betting man and these people have proven that they are pretty much exactly wrong 90% of the time, and now they're saying that CPI is going to reaccelerate and be persistently high for longer, what would you bet? Would you bet with them or against them being right? I think it's pretty obvious that we're going to see a big crash in CPI. I still am expecting several negative months this year. in CPI month over month. So anyway, I wanted to bring that one up. Andreas Steno here with the hot takes. Let's jump into now kind of the topic of the day, and it is about the SEC going after scams and Bitcoiners somewhat celebrating that this is happening. Not really celebrating, but I'm going to go through a couple tweets I thought were interesting. So Giacomo Zucco, super principled stand-up guy. All right. I have nothing at all against him. I have only respect and praise for Giacomo Zucco. So this is not a ding on him or anything, but this gives us an opportunity to talk through these subjects, which I think are important for understanding Bitcoin and understanding just maybe the ethos or what Bitcoin stands for, what Bitcoin can do for the world, how it's going to affect the world. Anyways, so here he goes. I despise shitcoin scams, but I'll defend Ethereum over Gary Gensler. I despise woke bullshit, but I defend Disney over Ron DeSantis. Virtue truth is important, but is meaningless without freedom. Freedom is what makes virtue truth significant, sustainable, durable, important. And I responded to this. You can see down here, I say, where is the line between defending and enabling? Because he said, I'll defend Ethereum over Gary Gensler. Now, what does that mean? You'll defend Ethereum over Gary Gensler. Ethereum has been wrong, okay? And a guy, who was it? Was it Vita? Let me see it was Evil Spock on Telegram, and he had a great point. Basically saying that Ethereum is fraud and Gary Gensler is force. So you're going to defend fraud against force, or fraud is less bad than force? I don't think so. I don't understand why you would say something like that. Anyway, I said you're defending, or there's a fine line between defending and enabling, because when people do stupid stuff that got them in trouble, that caused them harm, yeah, the other people that actually did the harm, they're the bad guys. But that person was stupid. I say you can't value truth and virtue without acknowledging certain truths of human nature and shades of culpability. I despise murderers and thieves, but would be stupid to wear bling down a violent alley at night. So by defending these people, you're actually enabling more fraud. You're not winning anything. You're saving the fraudsters from the consequences of their fraud that they would hopefully learn from. And yes, there are innocent victims. Of course, they're innocent victims. But you can't defend all innocent victims. You have to learn through you have to go through fire to come out the other side and learn. And it's just a sad thing in life that's true. I mean, you have to get wrecked to learn. What was that line from Fight Club? You had to hit rock bottom. I can't remember I can't remember the line now, but when he's burning his hand with that god dang, what was it? It was when they were making soap, and he burned his hand in Fight Club, and he's like, congratulations, you've now hit rock bottom. So yeah, you have to hit rock bottom to make a change in your life. And maybe some people will find Bitcoin and they'll learn about Bitcoin, and they'll become Bitcoiners. But some people will learn about Bitcoin and then jump onto NFT DeFi scam, number 2, number 8, and number 9. And then they get burnt, and then only then do they learn, right? And so who are we to say what is the proper way to learn? What's the best way to learn? You shouldn't shy away from pain. Pain is a extremely important thing. You can't have truth and virtue without pain, I don't think. I mean, you definitely can't have virtue without pain. You can't have, I mean, it sounds silly, but you can't have good without bad. But it's not even bad. It's that you are it's the, oh man, it's not the necessarily the ends. Okay. I mean, depending on what you think is the ends, but who are we to judge the means of getting to a certain end? In this case, I mean, as long as there's, these people willfully chose to be fraudsters. You know, it's not like anybody forced them to invest in scams. We were telling them the whole time. Some people just have to learn that way. So whatever. That's what I have about that one. Let's go on to another one. This one is from John Radcliffe. Now, he definitely is an OG in the space. Been around for a long time. I've probably been following him since 2014 or so on Twitter. I don't know. But he has a few good points here. So I'm going to read the second one, this quoted one, but I'll also read this first one here. I hope I made my point clear. This bullshit, we're all in this together around crypto, has to stop. Bitcoin is not crypto. Crypto is just a giant collection of affinity scams trying to piggyback off of the technical innovation of Bitcoin without actually doing the hard work that is required to keep a network resilient from attack. Rock on, John. All right, so this is what he's responding to this Jake Chervinsky. And I clicked on Jake's profile here. He is part of the Blockchain Council or Blockchain Association. So he's selling this blockchain dream. This is like so reminiscent of 2014, right? When everybody was about blockchain. He's on the board of Fund DeFi education. So this is scams. They're teaching you wrong things about DeFi so that you'll invest in scams. This is horrible, guys. This is absolutely horrible. Anyway, so Jake he says, I'm old enough to remember when most Bitcoiners believed in economic freedom and open market competition. I can't believe the number of self-professed Bitcoiners now saying some version of, I'm fine with the government picking winners and losers as long as the winner is my bag. Oh man, this is bad in so many ways. So John just hits it out of the park here and he says, I think you are missing what is really happening here. The cypherpunks who designed Bitcoin did so realizing that it would always be attacked. Enormous engineering effort has gone into making the Bitcoin network resilient to attack. We encourage people to run their own nodes. This by itself prevented the corporate attack of big blockers. We make sure that nodes can still run over Tor. We have the ability to download the blockchain from satellites. We fight hard to keep the block size down. So we can maintain decentralization and keep bandwidth requirements low. Our reaction is more akin to the squirrel who saved up his nuts for winter, shaking his head at those who never bothered to prepare. Bitcoiners always expect attacks and always prepare for them. Meanwhile, most of these altcoins do not have a cypherpunk ethos. They are highly centralized. They hard fork on a constant basis. Nodes run on AWS and blockchains are so large, no one can fully validate, or no one fully validates them. They have centralized authority figures, foundations, corporations, and even marketing departments. We spent a decade telling people they needed to think defensively, and they all laughed at us, confident in their technical superiority. This moment is a giant I told you so. If the SEC declares Bitcoin a security or the US government declares it illegal, Bitcoiners won't care. I would, but we will treat that as just another attack to overcome. That's true. Maybe we all just move to El Salvador, or we build a mesh network to route traffic. So that's really good. And I respond, I said, he's not missing it. He knows exactly. He agrees with you, John, but he's lashing out because Bitcoiners won't enable the scams and instead of him doing self-reflection. So very good take there by John Ratcliffe. Now we're going to go to another one here. I've been kind of hard on Lynn Alden in the past, but she is successful and has great signal I just don't agree with her 100%. And so here she has a great take on this. She said, how about cypherpunks write code in such a way that it is obviously not a security and there's nobody to go after? Crypto salespeople write code that is likely a security, but then request to be called cypherpunks and for the SEC to not apply existing laws to them. Exactly. I think this is a key insight here, is that these people knew the state of the world. And we can not like the SEC, we cannot like the existing system. And Bitcoin hopefully will go a long way to changing the incentives of the system and slowly but surely making it less, intrusive. But like they built this stuff that was seriously just obviously illegal. Bitcoin is not obviously legal. Bitcoin is obviously legal. And that's why Gary Gensler says this stuff. So for one, I think that everybody responds to incentives. Bitcoin's incentives are such a beautiful thing. They are a harmony of nature. And everybody is going to respond to these incentives. Gary Gensler is responding to the Bitcoin incentives. The billionaire class are responding to their incentives. Everybody is. And this outcome of the crackdown on altcoins, on these scams, was incredibly predictable and was predicted by almost every Bitcoiner. So if I celebrate, I'm celebrating that our theories were right, that that Bitcoin incentives work the way we think. That's what I'm celebrating. I'm not celebrating people necessarily getting hurt, but like I said before, everybody learns in their own way. And maybe some people have to get burnt to learn a lesson. I mean, I have a son, and a young son, and I see him doing things that I want to say, no, don't do that. Come on, don't do that. But you got to let them kind of learn on their own and get hurt in a certain way. You can't stop them. You can't protect them from everything. Bad things are not all bad. So anyways, that's all I have for today, guys. Thank you for joining me. My name is Ansel Lindner. This is Bitcoin and Markets. You can join me on a almost weekday basis on Telegram, t.me/Bitcoin and Markets, on YouTube, BTC Market Update, and on Twitter. I'm live streaming there as well at Ansel Lindner. So thanks everybody for joining. Check out bitcoinandmarkets.com. Hope you have a good rest of the day, and I'll see you on the next one. Bye.